Hey guys, what's going on? Jebb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, but we're also going to be talking about US stock markets because as you can see before you here on our screen, we're currently looking at the S&P 500, one of the largest indexes on the planet and certainly one of the largest indexes in America. This index was worth around $23 trillion, but the last couple of days have erased some of that value. We've seen the market capitalization and indeed the share price of the S&P 500 crash down to the floor. The last week and a half or so here on US stock markets have been extremely bad. Merry Christmas, because it looks like the US stock markets, the global stock markets are entering a bear market, and it looks like we're about to be entering a global recession. We're going to be discussing all of that and more in today's video because not only does a recession and a bear market have major implications on our individual private lives, it also has major implications on the Bitcoin market. So we're going to be talking about Bitcoin, we're going to be talking about the US stock markets, and we're going to be talking about how the two of them affect each other and what all of this means for Bitcoin, all of that and more in today's video. So if you guys enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. Also smash that notification bell so you'll be updated every single time I'm talking about a new recession or a new crash or rally in Bitcoin. And also guys, reminder here at the beginning of the video, today is the last day for the sale for the Cryptocurrency Technical Analysis Academy. I'll be talking about that more at the end of the video. You can use the Christmas code Christmas2018 in the description down below to get 20% off. Check the link down below to see what we have to offer there. I really do think you guys will enjoy. Anyway, now without much further ado, actually, let's go ahead and get right into it. We're going to start with Bitcoin and do the crypto market recap as always, but then we're going to be getting into the stock markets because, of course, guys, this is rather important. Of course, we talk about Bitcoin and we want Bitcoin to do well because we have investments in Bitcoin. But at the end of the day, if Bitcoin blows up and we have another business where we are making money somewhere else and the global economy is doing okay, well, that's kind of all right. If we have half of our net worth in Bitcoin and Bitcoin crashes to zero, but the rest of our valuation is in, say, a Shopify business, or you run an Amazon FBA business, or you have a social media marketing agency, or you do some other kind of online business, maybe you're a doctor, or a chiropractor, or a school teacher, or a college professor, whatever it may be, if your investment in Bitcoin blows up, well, that kind of sucks. You lost all that money, but at the same time, the rest of the economy would be doing well. Well, that's not exactly the way it's looking anymore because the S&P 500 and the rest of global stocks and the global economy are not looking that great either. We're going to be talking about that in a little bit, but let's go ahead and get on into some Bitcoin technical analysis. Bitcoin here over the last day Bitcoin's had a rough last 24 hours. Here on Christmas, I don't think there's been a single market on the entire planet, of course I'm exaggerating, that has done well here on Christmas Day. There are reports coming out all over the place that the Christmas Eve of 2018 for the S&P 500 and many other stocks was one of the worst, not one of the worst, actually the worst Christmas Eve that we have seen ever since the Great Depression. Not a great day for stock markets, and not a great day for Bitcoin either. As we can see, Bitcoin never stops trading. Of course, the S&P 500 and the NYSE and the New York Stock Exchange, NASDAQ, they're closed for Christmas. But Bitcoin never closes, and Bitcoin over the last 24 hours hasn't been doing very well. We ran up to $4,400, which was very nice indeed. We did set a new high up here. Bitcoin's actually looking rather healthy in regards, or in contrast, I should say, to the global stock markets. We're going to be talking about that in a little bit and what that means. But over the last 24 to 48 hours or so, not so much. Bitcoin did fall back below this level of resistance and come down to where it's currently trading around $3,900. Still a very large gain from its recent low of around $3,200. I believe that's about a 17 to 20% gain still, even with this little fall off in the last couple of hours. Anyway, let's go ahead and get on to the crypto market recap because we do have some stuff to talk about here. Bitcoin across all exchanges is currently trading around $3,800. I should point out that I was doing this TA on the Bitfinex chart and not on the Coinbase chart like I normally do. It's about the same ratios and the same gains either way, though. Anyway, Bitcoin's daily volume over the last 24 hours is doing rather well, about $6.5 billion of volume. We talked about volume in yesterday's video, but Bitcoin's down by about 10% over the last 24 hours. Like I said, the last 24 hours have not been that great for the cryptocurrency markets, and the last week and a half have been really bad for global stock markets, but nevertheless, Bitcoin has been doing really well over the last week or so. So that's okay. We're seeing a bit of a correction. Nothing really to be too concerned about, even though if we sort by change over the last 24 hours, we see all of 6 cryptocurrencies in the green, and 3 of them are stable coins. Overall, today has not been a very good day for the cryptocurrency markets, and like I've said so many times, it hasn't been a very good day for any market. Anyway, I believe if we sort by change over the last change by market capitalization here, then we're also going to see that XRP is trading around 37 cents. Ethereum's trading around $128. The nerd in me wants to say what that is. 2 to the power of 8, I think that is. 2 to the power of 9. I don't know. I'm just being stupid. Bitcoin Cash is trading around $164 and Stellar's around 12 cents. That's basically all we wanted to cover on CoinMarketCap, though, so let's go ahead and get back to Bitcoin and talk about Bitcoin in relation to the stock markets. I'm going to be doing most of my technical analysis here on the stock markets, but I'm going to talk about Bitcoin a little bit, and then at the end of the video, I'm going to come back and relate what's happening in the stock markets to Bitcoin, because, of course, this is the Crypto Jebb YouTube channel, not the Stock Jebb channel. Anyway, one of the first things that jumps out to me and that I've been watching for the last week or so is a very interesting formation here on the Bitcoin chart. I'm going to give you guys a second. Look at this chart. Pause the video for 5 seconds or so and see if you can see the formation that I'm about to show you. I like to do this sometimes to give you guys an idea of, to give you guys the opportunity to try and do some TA before me so that you guys can see what I see. I'm going to go ahead and show you. I see something forming here on this chart, and it's an inverse head and shoulders pattern. If we see right here, we have a shoulder right here. We have kind of a weird-looking head down there, but after this little pullback in Bitcoin over the last couple of days, this might actually not be a bad thing. It could just be that we're forming the shoulder of an inverse head and shoulders pattern to see Bitcoin continue higher, maybe up to price targets around $5,000. I'm not going to get into price targets for a continued rally on Bitcoin in today's video because we have so much to discuss in the stock market, but that is something that we will continue to discuss as this story develops. We will talk about Bitcoin hopefully entering an inverse head and shoulders pattern and rallying here over the next couple of days and into the next couple of weeks. Now, we do have a couple of things that we want to discuss here with Bitcoin, and the first thing that jumps out to me when I look at the Bitcoin chart, we come in here to the daily chart, we look at the Bitcoin chart in relation to the S&P 500, for example. We could also look at the Dow Jones Industrial Average or the Russell 2000 or 3000, doesn't matter. But the first thing that jumps out to me is that yes, Bitcoin was doing very poorly over here in the second part of November and the first part of December, and so too were the stock markets. They weren't doing all that great. But an interesting thing shows up here on the daily chart on the S&P 500, and that is that the last 4 or 5 days of trading, because of course the stock markets aren't open every single day and 24 hours a day like Bitcoin markets are. We see that the last several days in the S&P 500 have been rather bearish. I think we can all agree that a 10% drop in about 4 or 5 days on the S&P 500 is a very, very big move for as low volatile markets as the United States stock markets as opposed to Bitcoin. We see that the stock markets haven't been doing very well, but at the same time, we've seen an inverse correlation with Bitcoin, where Bitcoin has been doing extremely, extremely well. And while this hasn't really been a trend that has developed for long enough to really necessarily mean anything, it does bring the question, if the global stock markets and the U.S. stock markets and the global economy enter bear markets and recessions respectively, what is that going to mean for Bitcoin? I discussed this in the first video where I talked about a potential global recession incoming a couple days ago, but I talked about how Bitcoin was first conceived back over here at the end of 2008 in response to the massive screw up on behalf of the big banks and the governments that caused the 2008 financial crisis. Bitcoin was created and conceived in that time. The first time Bitcoin was mined was on January the 3rd, 2009, right over here. Right about right there on this day right here. This day right here, or actually there wasn't a trading day right there, but on January the 2nd was a day before Bitcoin was first mined on January the 3rd, 2009. And Bitcoin has only existed in a state of bullishness. Well, Bitcoin has only existed while the U.S. stock markets were in a state of bullishness and while a bull market was going on after around March or April here in 2019. The entirety of the time that Bitcoin has been around, the U.S. stock markets have been in a bull market. So that leads us to the question, what's going to happen when, it's not really an if anymore, when a bear market starts in the stock markets, and most likely when a recession starts in the global economy. What does that mean for Bitcoin, and where do we actually see Bitcoin going in relation to that, in response to that? Because that's a very big deal. Like I talked about earlier, if Bitcoin dies and the stock markets are doing fine, well then, okay, we'll leave Bitcoin and we go start some other kind of business. Not exactly ideal, because we all like this whole idea of the crypto revolution and we all want Bitcoin to do very well. Partially because we see Bitcoin as a hedge against crap like this, and we see Bitcoin as a way to get out of the mess that the Fed has caused and the mess that everyone has caused. This is a big screw up on everyone's part. A bull market for 10 years is something you don't see very often, and it's normally not natural. My point is here, we haven't seen what Bitcoin does in this time, and if Bitcoin were to crash and the stock market were doing fine, well, we could just leave and we could go invest in stocks and we'd do okay. Or we could just leave and we could go start a business and we weren't in a recession, so we'd do okay. But what happens when the stock market enters a bear market, and what happens when the global economy enters a recession and Bitcoin is just kind of trading there? What does that mean for Bitcoin? Well, there's two scenarios, obviously. Obviously, you have the scenario that Bitcoin crashes along with the stock market because everyone's pulling their money out of Bitcoin to go short the stock market or to start buying the dip on the stock market. But you also have what I think is a more likely scenario, and that is that when people start losing a ton of money, and believe me, a lot of people have lost a lot of money here in the S&P 500 and just about every single other stock, especially tech and transportation stocks over the last couple of months. What happens when they start losing money here? Well, in this scenario, there are two sub-scenarios, one of which is that people start taking their money out of investments and they start shorting markets, and the other is that they start moving their valuation and their investments into places where you can't just print money, and you can't hyperinflate currency in the similar way to the quantitative easing that we've seen over the last decade or so, where the Fed and the U.S. government had just been pumping more and more dollars into the economy. Where do you start putting your money when these kind of markets are doing poorly, and we start seeing quantitative tightening, and we start seeing the Fed messing with the monetary supply? Where do you see people put their money? Historically, they put it in gold and silver, and the reason that they put it in gold and silver is because if we go to commodities right here, then actually I'm not even going to show you that chart. You guys don't need to see that chart. But what we typically see is that we see people put their valuation into commodities like gold and silver, things that can't just be printed. You can't just go and print more gold. You have to go mine the gold. So it's much harder to inject gold into the monetary supply. So it's typically a much safer place to go when you're in a bear market. And that's a very similar thing to what we see with Bitcoin, because one of the things that people have called Bitcoin for a very long time is digital gold. And the reason they call it digital gold is because you can't print more Bitcoin. Bitcoin has a set limit to how many Bitcoins will ever exist. There are only 21 million Bitcoin that will ever exist, and it's actually a deflationary currency, unlike the US dollar and every single other fiat currency, which is an inflationary currency, where as Bitcoin approaches 21 million Bitcoin, the number of Bitcoin in circulation is actually going to go down from people losing their wallets. So what does all that jargon mean? I know I went super technical and went on kind of a higher level than I normally do in many of the videos. What does all that mean? Well, what that means is that when people get scared and when people start fudding here in stock markets and in global stock markets, US stock markets, and when the global economy starts doing poorly, where do people typically move their money? They move it into gold and silver because gold and silver are seen as hedges against these markets. Typically, they have an inverse correlation. Typically, when stock markets are doing poorly, gold and silver markets are doing rather well. And they do rather well for the exact same reason that Bitcoin will probably end up doing rather well. Bitcoin is in a bear market right now, but it looks like this bear market on a technical and a fundamental sense, is coming to an end. And I believe that's going to coincide perfectly with a new bear market starting in the S&P 500 and in many other stocks. And what I think that's going to end up causing is, one, a major recession that is going to hurt, and it is going to be painful, and it is going to hurt a lot of people in the stock market, and a lot of people are going to lose their retirement. A lot of people are going to get hurt. But at the same time, I think it's probably going to be rather bullish for Bitcoin. Now, you guys can go and call me a permabull all you want, but I really do think that because Bitcoin was specifically designed as a hedge against global stock markets and against U.S. stock markets, and by price manipulation by the U.S. government and by other governments, I do think that Bitcoin, partially because it was designed to do this, is going to do rather well in a bear market. Now, guys, now that we've talked about that, let's go ahead and talk about the stock markets and where I see stock markets going, because this, like I've said many times, and like I will say probably another 50 times before this video is out, is a big deal, and this is a problem. So let's go ahead and talk about this. Let's look at where the S&P 500 has come. Let's go ahead and rattle off a couple of different stocks. We'll look at the S&P 500, the DJI, the Russell 3000 perhaps, and a couple of other stocks you guys might be interested in. The S&P 500 is down by about 20%. Depending on who you ask, whether or not a stock is down 16 to 20%, normally people will say 20% down from all-time high. That is when a bear market has begun in that stock, and currently the S&P 500 has one last chance to save itself from entering a bear market. We're down 20%, so we're kind of on that knife's edge. Are we in a bear market? Are we not? We don't really know yet. But right now, the S&P 500 has one thing propping it up, and only one, and that would be the 200 weekly simple moving average right here. That is the last line of defense for the S&P 500. If the S&P 500 breaks this, goes below this, then it has well and truly gone over 20% retrace from all-time high. Everyone in the market is going to consider the S&P 500 one of the largest indexes on the planet, worth tens of trillions of dollars, to be in a bear market, which sets the tone for every single other stock, especially the stocks that make up the S&P 500. Everyone's going to agree that we're in a bear market, and people are going to start selling, people are going to start shorting, and we're going to start seeing bigger red candlesticks, and the S&P 500 will probably be below 2,000 points very, very quickly. We'll probably see something like that happen. I could very easily see the S&P 500 pulling all the way back down here to levels of support down here, where we saw it pull back a couple of years ago, back over in late 2015 and early 2016. A lot of people are losing a lot of money right now, and when people start losing money, they start pulling out, and when they see that the market's going down because other people are pulling out, they start pulling out and start shorting the market. You get this snowball effect, which is kind of what we saw. We saw a bullish snowball effect come here over the last 10 years. But when a market starts selling off this hard, people get scared. They start fudding. They start selling their positions. They start shorting. They start moving their positions into things like gold, silver, and Bitcoin. And you see the market get worse and worse and worse. Now, of course, the federal government and of the United States, the Fed, a couple of different teams I'm not going to go into in today's video, are going to come in and try and prop up the market and save the market, but whether or not they can is that's a question for future historians, because we're not there yet. Anyway, let's go ahead and talk about a couple of other ones. Let's go ahead and look at the DJI, the Dow Jones Industrial Average. That would be under stocks. the Dow Jones Industrial Average right there. There's a very similar thing going on here. The DJI, I do believe, is down about 20%. Yeah, right down there, about 20%. This 200 weekly simple moving average also is showing support for the DJI, although it's a little bit lower. So perhaps the Dow Jones could go a bit lower down here to around just a little over 20,000 points. We have seen that this level of support, this moving average, has given it support in the past. Hopefully we'll get a bounce there, but if the S&P 500 goes below this, I don't think we're going to have the ability to get a bounce there, because if the S&P 500 is crashing that hard, the DJI is probably going to be doing the exact same thing. Let's go ahead and look at some other stocks. We'll look at FANG stocks. We'll look at Facebook. I do believe Facebook stock is FB. Let's go ahead and look at Facebook, because Facebook hasn't been doing very well, for one. And we look at Facebook right here. Facebook is down by 44%, 43%. Not a great time for Facebook. Facebook over the last half of the year, the last 2 quarters, been very bad. Amazon looking exactly the same. AMZN. Go ahead and check out Amazon. Amazon's looking like it's going to be trying to hold support down here on the 100 weekly simple moving average. We'll see whether or not that can hold. Amazon's down by 36%, well and truly in a bear market. APPL, which is Apple. Many of you guys may be watching this video on an Apple product. Ain't doing so hot, excuse my southern drawl, is down by about 37%. Not a great day for Apple. Let's keep going. Tesla. Let's see what Tesla's doing. TSLA. Elon Musk's been complaining about the shorters. Tesla's actually not doing quite all that bad. That's interesting. Look at that. Tesla's not doing terribly bad. Tesla's doing a little bit better. A couple of these stocks I didn't check before I started watching the video, before I started recording the video. I wanted to kind of rattle them off and give you guys live technical analysis. I do that sometimes. I'll do live technical analysis so you guys can see what the process is like of doing technical analysis live, rather than me having everything pre-planned. Tesla's actually been doing okay. We've had a lot of ripples here. Excuse the pun over here on Ripple, but we have seen a lot of ripples there. Tesla hasn't been doing all that great. Tesla's been doing better than many other companies. Let's see what else we want to look at. NFXL, that's Netflix. Netflix is a company that I'm sure you guys are familiar with. It's recently broken the 100 weekly simple moving average, moving down about 45%. So I think you guys get the point. Just about all these tech stocks and many of the transportation stocks I'm not going to be getting into. Many other stocks like Nvidia, for example, is doing very poorly. Nvidia's down like 53%. Many of these stocks are doing very, very badly. And what does all this mean? Well, I go into some more fundamentals about why this is happening and what this all means in a video that I'll link in the top right. That video, and I'll put that on the end card also. That video, I talk about interest rates and how interest rates have been very low. They've been slammed to the floor. They were completely at the floor for many, many years, causing a lot of people to take out basically free debt, take a lot of money, leverage a lot of money. There was a lot of quantitative easing, so we had a lot more money being pumped into the economy. And overall, the economy got inflated with debt and extra money, and the money supply went up, and this is a recipe for disaster. We saw a kind of a similar thing happen in 2008 when people were taking out subprime mortgages on homes that they could not afford, and they had to default on those loans, and the government came in to bail them out. We have a big problem here, guys, and I don't have time to get into everything that's going on right now. This is going to take a couple of videos to unpack and talk about. But my point is that the stock market is not looking very good. The stock market is actually looking rather badly, and Wall Street has given you a massive, massive block of coal for Christmas, because this is one of the worst Christmases in the history of the United States stock market. But you guys know I always like to leave the video off on a bit of a higher note. I don't like to leave the video with you guys feeling sad or scared or worried or anything. So let's go ahead and talk about what all this means. Well, every time that there's a crash in a market, be it in Bitcoin, be it in the stock market, be it in the tulip mania, there's always an opportunity. You guys know it's one of the most cliche things to say that there's a silver lining to every rain cloud, but it's true. There is always a silver lining. When Bitcoin is crashing, that's fine, because guess what you can do? There's 2 things you can do if Bitcoin crashes. 1, you can short the market, and 2, you can buy long-term positions in the market. So while it was very easy to make money in 2017 with Bitcoin running on a bull market, when Bitcoin's been in this bear market, you could have made a ton of money, and I know personally a lot of people that have made a ton of money shorting this market, and I know a lot of people, including myself, that have been buying a ton of Bitcoin down here at these low levels for a future bull market. Every single time a market goes down, there's always a silver lining. Always. Bar none. There's no example where you cannot find something good in a scenario. You can always find something good, and if you focus on those things that are good, you will be living a much, much happier life. I have friends who are pessimists. I have friends who are optimists, and I'm most certainly on team raging optimist, because it always seems to... I always end up seeming to be correct. It always seems that if you give it long enough, you have enough patience, that things do end up working out in the end. Let's talk about what that means for the stock market. One of the things that we've seen here over the last 10 years of this major, and I do mean major bull market that we've seen, in the U.S. stocks is that we've seen a lot of problems form in the economy, and specifically a lot of problems be exasperated that already existed before this 2008 financial crisis, partially which caused the 2008 financial crisis, but a lot of them have gotten worse. The money supply has gone up, inflation has gone up, the interest rates, like I said earlier, were slammed to the floor. People took out a ton of debt. If you watch that video on the top right, I go over the debt clock. I talk about how the U.S. national government is in like $22 trillion worth of debt. The U.S. people are in about $20 trillion of debt. There's like $56,000 worth of debt per citizen in America. And that's a very big problem. But one thing that you see a lot of times in bear markets is that bear markets are times to reset a lot of these problems. Now, granted, they're not very fun. Of course, a lot of times they drag on longer than they should. For example, the stock market crash, Black Friday of 1929, when the Great Depression started. Of course, that could have just started as a little miniature correction, which ended up helping the market. Of course, it dragged out a lot longer. But we saw a similar thing happen in 2008. We saw a massive crash that reset a lot of these problems that we had back over here in the early 2000s and allowed for the federal government to have a reason to come in and start putting some more regulations on the economy so that something like this may not happen in the future. Well, at the same time, it looks like this very similar thing to 2008 is about to happen again. But nevertheless, the point is here is that when a bear market happens, a lot of times that's a good time, one, for the economy to reset and a lot of these problems in the economy to get alleviated because the federal government has a good reason to come in and try and fix it. Now, I haven't ever talked about my politics, but you guys can probably gather, and I'm sure a lot of you guys are also, that I'm a rather libertarian kind of guy, so I'm not a big fan of the government coming in and fixing things, but at the same time, it is the government's job to protect national security, and the economy is a big part of that. So I think that the federal government coming in and doing what it needs to do and putting regulations in place that prevent something like what I think is about to happen from happening again would be an okay thing. And also, of course, guys, the same thing is true from the Bitcoin bear market, that two things happen in bear markets. You see people short and make a ton of money, and you also see people buy long-term positions on their portfolio. Because one thing that you saw back over here in 2007 on into 2008 and 2009 is that people saw their housing prices go down. People saw their house value go down. People saw their portfolios crash. But what they didn't realize is that if they had held their market, if they had held their house for another 3 or 4 years, if they had held onto their portfolio for another 3 years, they would have been at break even. And if they held on to it for even longer, they would have doubled their investment up here if they sold at the top. So one thing you also have to realize is that stock markets are not a speculative investment. Stock markets are intrinsically tied to global economies, and every single government on the planet has a vested interest in making sure that they bounce. So they are going to bounce. It's not like Bitcoin, where there's a small percent chance that it goes to the floor and never comes back. There's no chance of the stock market's turning into tulip mania and going down and never coming back up. And if they do, the value of your money is going to be a lot less important than the amount of water, food, and firearms you have, because the global economy and the global society and civilization is going to be collapsing if the stock market crashes and never comes back up. My point is here, guys, is that the national governments do have a vested interest in making sure that the stock markets are performing okay, and typically they are going to bounce. With all that said, the next 12 to 24 months may be very bad. It may be very hard, but that presents the last opportunity that I want to talk about here, and that is this. There are a lot of people over the last 4 or 5 years, including myself, who have started online businesses, who have started making a lot of money and started becoming entrepreneurs. They put entrepreneur, they put CEO and everything in their Instagram bio. I don't go that far because I'm not that full of myself, but a lot of people have tried to start businesses here in the bull market that we've seen over the last 10 years. And a lot of people have been very successful, but one problem that you see is that it's been so incredibly easy to make money over the last 10 years on the internet. It's been ridiculously easy. But one thing that you're going to see here over the next 12 to 24 months as we enter this bear market and recession, which I'm assuming we're going to enter, it definitely seems like we're going to. Maybe we can be saved at some point. I don't think we're going to at the same time, though. I think we're going to go through a full bear cycle at this point. What we're going to see is that all those people who have been making a ton of money here over the last 10 years are going to have their mettle tested. They're going to be tested. People are going to have to see how well they can do in a bear market, and you're really going to have that experience of a bear market and see how hard it is to make money when the economy is not just booming. And what that means is if you guys were thinking about starting businesses, starting online businesses, don't be discouraged, because here's the thing. If you can make money in a bear market, you can make a lot of money in a bull market, and the bull market is going to return, guys. We're going to go through a bear cycle more than likely. Bitcoin, the S&P 500, and maybe even Bitcoin are going to crash. The next 12 to 24 months may be hard. They may be very bad, but we've all been through hard times, and let me ask you a question. Think back to the hardest time in your life. Think about how bad it was. Think about perhaps you just didn't want to go on. Think about just how hard it was. Think about maybe a time you had someone that you really cared about and you stopped being friends with them. You broke up with them. Maybe you had a tree fall on your house. Maybe you had a hurricane come through and wipe out your house. A lot of people have lost houses back then. back in 2018 with those hurricanes coming through the Carolinas and Florida. Think about the hardest period in your life and think about how bad it felt. Think about how hard it was. Think about how much hardship you went through. Think about that. Feel that visceral energy, that pain. Now think about this. You're listening to this message, so you made it through that. And if you're not through it yet, you're going to be in the future because it's not going to kill you. I don't care what it is, you're most likely going to survive. I'm talking to 99.9% of you. There are exceptions, of course. But you're going to make it through it. You're going to survive, and you're going to live on. You're going to fight on, and you're going to go watch Independence Day and watch that amazing speech by the president, because that's exactly what I'm talking about here. Just because it's going to be hard doesn't mean you're not going to make it through it. So look at it as a learning experience. Look at it as a way to test your mettle and to grow so that the next time a bull market starts, you guys are ready to make a ton of money in Bitcoin, a ton of money in the stock markets, and a ton of money in business. I hope that, guys, helped you out. One of the reasons I'm never, ever all that worried about markets, you guys know I always seem to be upbeat even when the market is crashing. I've seen Bitcoin crash 20% in a day and it not even faze me, because one thing you have to realize in life is that no matter how bad it gets, one, it can get worse, so be happy it didn't, and two, it's going to get better, so be happy that it will. That's going to basically do it for today's video, guys. I do want to go ahead and talk about CT2A because this is the last day of the sale, but we're going to go ahead and wrap it up after that. If you guys did enjoy the technical analysis in today's video and you want to learn how to do technical analysis for yourself, analyze the markets, and try and get an idea of where they're going and why they're going in that direction so that you guys can know where to place your trades, I do highly recommend the Cryptocurrency Technical Analysis Academy, linked in the description down below. For the rest of today until midnight Eastern Standard Time of the 25th, Christmas, we're going to be running a sales 20% off. If you guys get in the course, you're going to definitely be glad that you did. I think we've had a lot of people join the course. They've all been very happy about it. In this course, we take you from the absolute beginner technical analyst going up through more intermediate and advanced topics such as math psychology, how to plan and execute profitable trades. Very good video. I love this video. We also talk about gauging the strength of the support and resistance levels and gauging the strength of the bulls and the bears. Two important pieces of math psychology. Very, very important things that you need to understand. Guys, here's the thing. If you're trading with a couple $1,000s or more in cryptocurrency, even if you're trading with a couple $100s in cryptocurrency, the lessons that you learn in this course are things that most technical analysts know and most technical analysts that are successful use so that they can make money. You need to know how to do technical analysis so that you can go out and make your trades, because let me tell you something. A lot of people don't realize this. A lot of people think that one of the best investments that they can make is in BitConnect or Hashflare or Bitcoin or XRP or Ethereum or Ripple or... I said Ripple twice. I said XRP and Ripple. It doesn't matter. A lot of people go down this list and they say, okay, well, one of these is the best investment that you can make. But you are completely dead wrong if you think the best investment you can make is in some kind of cryptocurrency or stock. One, because they're not doing all that well today and normally or over the last little while. But two, because there's a much better investment for you guys to make, and that is an investment in yourself. I've always believed and I've always stood by the fact that the best investment you can make is not one in any kind of investment like a cryptocurrency or a stock. It is an investment in yourself. So if you guys want to make the most money in cryptocurrency, technical analysis and technical analysis in the stock market, the best and the highest ROI that you're going to get is not from a cryptocurrency investment. It is from an investment in yourself and an investment in your education, because you have the highest ROI. And I do think that this is a good place where you can go and learn how to do technical analysis so that you can increase that rate of return, that rate of interest, that ROI. Anyway, guys, I think I've rambled enough. I think I've talked enough. I think you guys get the point, and I think I'm going to wrap the video up here, guys. I'm going to go spend some time with my family because it is Christmas. I do want to thank each and every single one of you for watching. I hope you guys aren't scared about this market. Let's see Bitcoin go down to zero. Let's see the S&P 500 go down to zero. Let's see the entire global economy collapse so we can put ourselves to the test. Of course, I'm joking. I don't want to go that poorly. I am well and truly rambling. I do want to thank each and every single one of you for watching. Merry Christmas, and I will see you guys in the next video. Peace.